Hey everyone, welcome to the channel. Today we're going to break down one big question. What is trading? A lot of people hear about trading in the stock market, Forex, or even crypto, but the word itself can feel confusing. So in this video, we're going to slow it down, step by step, and explain exactly what trading means, how it works, and why people do it. By the end of this video, you'll have a solid understanding of the basics, even if you've never traded before. At its core, trading is simple. It's the act of exchanging one thing for another. In financial markets, it usually means buying and selling assets like stocks, currencies, or commodities with the goal of making a profit. Think about it like this. You buy something at a lower price and then sell it later at a higher price. The difference between your buy price and sell price is your profit. If the opposite happens and you sell for less than what you bought it for, you take a loss. So trading is about timing, price movement, and decision-making. It's not just about owning an asset, it's about actively moving in and out of the market. A lot of beginners confuse trading with investing. They're related, but not the same. Investing usually means buying and holding an asset for a long period of time, sometimes years, because you believe in its future value. For example, buying shares of Apple and holding them for 10 years. Trading, on the other hand, is more short-term focused. You're looking for opportunities to take advantage of price movements that could last hours, days, or weeks. Think of investors as farmers planting crops for the long term, while traders are like shop owners who buy and sell goods regularly to keep making money. So when we say trading, what are people actually trading? Here are the most common. Stocks, buying and selling ownership shares in companies. Currencies. This is called Forex trading, where people trade money like US dollars, euros, or yen. Commodities, physical goods like gold, silver, or oil, traded on markets without ever physically touching them. Cryptocurrencies, digital currencies like Bitcoin and Ethereum, known for fast price swings. Even though the assets are different, the principle of trading stays the same. Buying at one price, selling at another. Here's how it works in practice. Imagine a company's stock is trading at $50. You believe the price will rise, so you buy 10 shares, spending $500. If the price goes up to $60 and you sell, you now have $600. That's a profit of $100. But of course, if the price drops to $40 and you sell, you end up with only $400, which means a $100 loss. That's the essence of trading, placing bets on price movements and managing the outcome. Sometimes you win, sometimes you lose. The key is learning how to make more good decisions than bad ones. Prices in markets don't move randomly. They move because of supply and demand. If more people want to buy an asset than sell it, the price goes up. If more people are selling than buying, the price goes down. These shifts are influenced by news, company performance, global events, interest rates, politics, and even trader psychology. In short, markets move because people's expectations change every second. There are different kinds of traders out there. Retail traders. Everyday people like you and me trading from our laptops or phones. Institutional traders. Big players like banks, hedge funds, or investment firms. Market makers. Companies that provide liquidity by constantly buying and selling, keeping the market moving. Retail traders are a small piece of the pie compared to institutions. But with modern apps and platforms, more people than ever have access to trading. So why do people trade? Some do it for profit, hoping to grow their money. Some trade professionally, as a career. Others see trading as a way to participate in the financial world and learn how money works. It's important to note, though, trading is not a guaranteed way to get rich. For every winner, there's often someone on the other side losing. That's why knowledge, discipline, and patience are critical. Alright, so let's recap. Trading is the act of buying and selling financial assets, different from investing because it focuses more on short-term moves, about taking advantage of price changes which are driven by supply and demand, accessible to everyone but requires responsibility and risk awareness. So, when you hear the word trading, think of it as a marketplace, just like a farmer's market. But instead of fruits and vegetables, people are exchanging money, stocks, gold, and even digital coins. That's trading in its simplest and clearest form. If you found this breakdown helpful, hit the like button, subscribe for more beginner-friendly guides, And let me know in the comments what part of trading you'd like me to cover next. Thanks for watching, and I'll see you in the next video.